Good morning. For your safety, do not use boomerangs in cribs, beds, carriages, or playpens. This is strictly our opinions. Content provided at the event is for general information only and not intended for public.
We're going to do the best we can.
Not intended to provide specific advice or recommendations for any individual. Any performance referenced is historical and does not guarantee of future results. All indices are unmanaged, and may not be invested into directly. And that's because you have incremental expenses in there. We never mentioned that, but that's why. Any economic forecast set forth during this event may not develop. Can you imagine that if I told you it's going to rain tomorrow, it might not, as predicted, and there can be no guarantee that any strategy will be successful. Wow, who knew? These thoughts are the opinions. These are opinions are those of Gimbal Financial and do not represent those of LPL Financial. You know, if you've joined us for a while, we do have some opinions, and hopefully that's part of the reason you join us. Securities are offered through LPL Financial, member FINRA and SIPC. Investment advice offered by Gimbal Financial, a registered investment advisor, and it is a completely 100% separate entity from our friends at LPL Financial. There you have it.
Nice job on the disclaimer, Keith. You know, Keith's daughter, Kelly, popped in for a couple minutes this morning, and she was getting some tools, a ratchet set, I think, from underneath our kitchen sink. And I was so proud of Kelly because she was going to put together a table at her employer. And as a business owner, person, a high-level employee, those are the types of things you do. You pick up napkins from the parking lot, you assemble picnic tables, and you also read disclaimers. So how many years have you been doing this?
Been in the investment advice business?
Yeah.
35 years, baby.
All right, 35, and you're reading the disclaimer. Nice. But Amanda, we definitely missed you. So,
well, I had help with the disclaimer. I bought a boomerang, and I don't know if you guys can see that or not. Look at the warnings. They're all this.
Is it written in Aussie? Good day, mate.
Good day, mate. It is not. It probably is in Chinese, if I was going to guess. There's disclaimers on the back. I'm sure there's disclaimers on the paper. There's probably some even print. Now I can see it on the plastic. It's even etched on the plastic there. So this right here could cause damage. I think that's how they use it in Australia.
Yeah,
I think they use it to go hunt.
That's what it's supposed to do.
There you go. I'm going to find a field to go throw that thing in and see if I can't do some damage before long.
Is that the COVID tracker?
Let's share this bad boy, shall we? If we can figure that out. Amanda, we really appreciate you doing this in the normal times. She's in Houston, Texas, and probably the hottest possible time you can be in Houston, Texas. It was August that caused me to leave Houston, Texas. I moved in August, survived a second August, and I think I moved out in June. I'm like, I'm not going to stick around.
Texas Instrument days?
Yeah, I decided, and that's not a recommendation. That's not a recommendation.
He used to work for Texas Instruments. So if you are working for like a humongous company and the bureaucracy, you know, if you have the bureaucracy blues and you want to have a listening ear, Keith can understand. Give him a call.
And I can bring great sarcasm to the bureaucracies that are out there. I was talking with a client earlier this morning, and she was pointing out how the cyclical process of things, and she's near retirement age in the medical industry, would drive her crazy that she knew exactly how much budget her department needed, but the system wouldn't let it break it down by this many computers. She had to give a number that totaled that number of pieces of equipment and things that actually needed. And she knew that when instead of breaking it down and explaining the parts, she knew she had to just give them one number, and that they would probably cut that number by 20%. So it causes people to increase it by the 25%. So the 20 gets you back down to where you need to be. And I was just laughing with her. I said, you know, that's probably just like society. Young people, by their very nature, have new ideas. They want to throw out there new thoughts, and it's a very good temptation. I think the older people haven't seen that pony ride before, and So anyway, that happens not only in society, but in business. And so you just have to kind of cycle through those. And in major corporations, they used to centralize all the things in one place. Then they go, we need to spread everybody out and decentralize. And so with COVID, I think we're in a decentralized economy right now, but I got a feeling in the next 5 years, you'll see things get centralized again. Just a Keith prediction, no guarantees, just like the weather. It is, who knows what will happen. So how about the COVID tracker? What do you think? This is what I think. And the blue is the positive test. The orange is the number of deaths. There's been a bit of a correlation with some of that. And I still don't know that there's really any science behind the positive tests, whether you have false positive, true positives and whatever. But this spike that we've seen with the so-called Delta variant really hasn't significantly altered the number of deaths so far. We've had some friends that have had COVID lately, and it's a scary thing to go through that. However, that's part of culture. Anyway, you have diseases that come and go, and that's just, depending on when you're born, you have more risk. If you've been born in 1910 and you had to go through the Spanish flu, you lived in a time of more risk. And so these things come, they go. That's the way life is, and I love life, and I'm not demeaning it in any way. I'm just saying that you need to live it along the way as well. So if this is true, then we would suspect that deaths might go up in the months ahead or the weeks ahead. We'll watch this and see what happens. This one shows you the bed capacity. The orange is the ICU beds across the country, according to the U.S. Department of Health and Human Services, that are vacant right now.
Yeah, and even staffing those beds is very difficult. I was just on the phone with a really great client of ours, and she's a nurse, and she was telling me that staffing the beds with nurses is tough. There's a nursing shortage.
Yeah,
and so there's all types of challenges within these graphs. There's data points that doesn't really tell the whole story.
Yeah. So this is just our way of trying to look at it and get the emotions of different people's biases. We're looking at the data. The data, isn't emotional, and we realize that if you've been affected by this, it's a very emotional thing, and so there's sure anxiety out there.
Or if you've got other problems going on right now during COVID, and you try and get a bed for your problem, it's tough. That's real.
This one just shows you the hospitalizations relative by different ages over here. The 65 and older is this group down here at the bottom, and you can see that the incremental increase is really those 18 to 49 is where it is, because you've got a high percentage of these people in the dark blue that are already vaccinated, and these folks up here, they didn't get as much impact and influence by COVID early on, but relative to what's going on right now, you're really seeing a rise in those folks 18 to 49 years old. This other stuff, I can go into detail another time if you have an interest, but that's generally where it's at. Our recommendation with regards to the COVID is now's a good time to get outside, get a lot of exercise. The more you can do to increase and improve your own immune system, I think the better suited you will be for whatever comes along. There's other, I can't remember the other virus that's going around. I think it's RSV, and it has very similar symptoms as the COVID, and yet it's really the younger kids are having more challenges with that. And I think my opinion is probably some of that is just the reality that the young people's immune systems have been a little bit challenged because they haven't been around people, and so the how long it takes their immune systems to build up from all the isolation will just take time. But I know when Connie and I were young parents, every possible sickness that could happen came into our house, and my immune system for a good decade there wasn't much that could get me. I had already come through the door, and my body had seen it, and so we'll see what happens with that. Doug, what's on your mind today?
One of the things that's on my mind is just thinking about what is new, what's new to me, what's new to the industry, financial industry, and one of the things I'm really excited about Gimbal Financial's future is just the visibility that you guys will be able to have into your accounts and into the way Gimbal sees the world. And so we're looking at new ways to expand visibility for you. And I think that'll create speed. I think that'll create accuracy, which breeds confidence and trust overall. And so one of those new spaces, new creation spaces, has been in the financial technology blend. And like, I'm probably going to get this year wrong. I think it's like 1866, somewhere around there. There was a cable laid between New York and London. And that might have been like the first big FinTech move. And, after that time frame, the Fed wire in the early 1900s allowed money to move electronically. And I think the Diners Club and American Express might have come out in the 50s. Beyond that, Barclays introduced an ATM in the late 60s. And now we are exploring blockchain. And, I could Venmo Keith money for today's lunch. I mean, there's just really cool things in the FinTech space. And as a small business, we have the opportunity to have some of these tools that I just could never dream of. I never thought a little firm like Gimbal Financial on Rangeline Road in Carmel, Indiana, could have all the same tools that a firm in New York City has. And so technology has created that, and it's fantastic. And so I'm super excited about new business. New ideas move markets. Innovation is what will allow us to pay our debts. And we got some big ones. That innovation, if we live in a country that allows us to take risk and be rewarded for those risks, these types of new innovations, they'll have buyers, and that creates revenues, and that helps send kids to camps. So and families can go out to dinner and have extra money to spend. So that's what I'm excited about, is new beginnings, and specifically the FinTech space, financial and technology space. It was created, like I said, somewhere in the mid 1800s, but it's moving fast right now.
I had a trip down to the Murray State University over the weekend, and it's evolved quite a bit since 1979 when I rolled into that freshman dorm. And I had a introduction to computers class in 1979, and I had a passion to understand it and the evolution that's taken place from computers from 1979 until now. If you would have told me in that classroom these things were going to happen, it would have been an absurd idea.
Right.
And one of the papers I wrote was entitled EFT, which stands for Electronic Funds Transfer, a cashless society.
Okay.
And so as I walked the halls of Richmond freshman dorm, my peers, when they heard about that title, they just started laughing hysterically about how absurd an idea that was, that we wouldn't have cash. And it is such an evolution, such a transformation, that it really probably will even impact governments who have been the source of creating cash in their culture. And that's why the cryptocurrency is, I think, an anxious thing for different governments, because if they can't control the actual cash, they're giving up some of their control over the people.
And some of you folks might be follow the money type people. If you're looking for the answer to a problem, you can follow the money and normally figure it out. And for financial institutions, one of the ways that they make money, LPL, Fidelity, Charles Schwab, Merrill Lynch, any of these big firms, one of the ways they make money is by holding your money in a money market. And by holding your money in the money market, that's cash. You can get at it electronically, but that is a big revenue source. And so even just the visibility on how is my cash invested? What does that look like
Yeah.
Those types of things, that type of visibility is what we're looking forward to sharing with you more and more.
Well, it's exciting. I was on the phone with our friend Ken Moore yesterday, and how did he define that?
And Ken is this. If you're new to this, Ken is a guy. Ken's been around the block. Ken was an executive with a financial institution, and it's just one of the wisest people I know.
I when Ken trained me in the 1980s, he was in his 50s. Let's just leave it at that. And so he was talking to me on some type of headset that connects to this, which I don't know, and bemoaning the fact of how fast technology was going. And I think that's a common trait for folks. As you get a little bit of seasoning in you, it's harder to learn the new technology versus the technology you have known in the past. And so whatever decisions we make, I think that we'll be very cognizant of where you are in your place of life to help make the transitions easier for you. So yeah, that idea of technology can freak you out. And I think it's less so for the younger generations because they've kind of been brought to age during these things. Well, last few weeks I've been talking about the markets. Let me share this screen with you. This will give you a flavor for the NASDAQ, which we've been talking about, the fact that it's kind of losing a little bit of oomph here in the last few weeks. It peaked out right at the 14,900 level over here, and then it's just kind of rounding out a little bit. It did this kind of thing over here, did it over here, and we don't know. We've talked about this red line is the 50-day moving average, and it came all the way down to this yesterday, dropped below it, and then the buyers came in to try to push it back above that line. And so that's what factually happened.
Can you zoom that out about a week, or go to the weekly?
Go to the weekly.
Yeah, I want to just touch on this real quick. There's a saying in investment business, and it's the trend is your friend until it's not. And as you can see, if you were to look at this, you would say, yeah, the trend on this is up. It has been up and up and up, and that's great, and it continues to be. But a move across that black line would mean it's not. And so that's the type of stuff that Keith and I are looking out for you. We're trying, to focus in on the data. Again, just like the COVID tracker, not emotion, not gut, but what is the data telling us on the NASDAQ?
Yeah, here's an example of that, Doug. I took it back to 2001.
No.
And
sorry,
Pepto-Bismol or something. Yeah, and so you could.
I thought the market just went straight up.
Yeah,
that's what I used. That's about 2001. That's what I was thinking. I thought the market just went straight up.
Yeah, and you could see that trend was like that, and then right here.
Oh, man, that was a brutal time. Is that March? What was March of 2000? When was that? Is that on that chart?
That's over here. That's when it peaked. Yeah.
Oh.
And it hadn't even started. March, it didn't even start to get bad yet, Doug.
Oh, I remember it.
Yeah. So you can see the trend, and everybody thought the world was at peace and everything would just make, money all the time. And the NASDAQ peaked out at 5,100 there. If I switch this out a year to 02.
I'm just going to say it's a painful exercise. I've done this.
Yeah. So here was that trend that we showed you before. Here is where I just pointed the arrow where it broke down below that 200-day average. And this went from 5,100 down here to 1,200. And, one of the people we've studied over the years, William O'Neill, says all stocks are speculative. And I know that you may not want to agree with that, but we'll go through some examples today. But the reality is, even the stocks you love the most that you've owned for a long time, they can change directions on you and do bad things. And
or any investment.
Yeah,
for that matter.
Yeah.
It could be a bond. It could be real estate. It could be a commodity.
Right. Like I was thinking, a house. You know, if you go out west and you see some of these ghost towns out there, that there was a reason there was a house there for a period of time, and now it just sits empty and no demand for that thing. And so you just never know when things are going to change. And we're very much optimistic. We're just being realistic in the way that they look. So that was gave you a flavor of the NASDAQ. The S&P 500 so far this year is just it's just acting like it only goes one direction, right?
Yeah,
It just,
trend is your friend.
Yeah.
Look at that.
Yeah, it
Go to a weekly. Let's take a peek.
Yeah, this long trend here, probably it's just kind of gone along that. We had this gap here, but then if I go back and I switch these dates a little bit and go to 02, it changed. It just crossed over this 200-day moving average right here, and it went from, what is that, about 1425 and dropped all the way down here. It looks like that's probably about 700. And so these things can happen. And why I think we want to point this out to you is that you need to be aware of your own personal risk in these things. And if you have too much money in the markets, whether it's your 401k or money with us, they can drop significantly. And we're doing as much as we can to cushion those blows for you. But you also need to communicate with us any concerns you have about things that might seem risky out there.
And you may be in a phase where it's like, look, I've got 15 years, I've got 20 years, wherever you're at. I mean, that's going to change the way you look at this stuff.
Yeah.
But the emotions are still there. And no matter how much time you have, the emotions are still there when it's not looking so good.
Yeah. Emotions can derail good decisions, not only in investing,
Absolutely.
but every aspect of life.
Everybody would agree with that. Even an indexer like Vogel would agree that the emotions can get into the way.
Yeah. Yeah. Well, here is one segment of the market that hasn't been your friend with the trend here. It's the smaller companies, and they, you can look here and see that they had a good trend going through the early part of this year, and then they flattened out and the volatility's picked up, and they came through the 50-day moving average here a number of times over here through this red line where they rallied back up above it. This time it came down back in July to the 200-day moving average, about 2100. Today it dropped through or yesterday it dropped through the 200-day moving average. This isn't real time. This is yesterday's chart. So we're going to watch this one really closely and see how this thing prevails. Hopefully it'll catch this threshold here and give us another kind of rounding where it goes back up in the days ahead. But we don't have a crystal ball to tell you that that's going to happen. But that's one sector of the market that sure is showing some weakness today. Let me go over some ideas with y'all real quick. Again, all these historical charts I'm going to show you meet all the qualifications that LPL's compliance wanted from us, and so it's all historical. This is as of yesterday's values, so these will not be today's real-time values. I'm just wanting to give you some ideas. There's just shy of 9,000 stocks on our software that we've been showing you, and I've just told you about the different moving averages in the last couple of weeks. The green line is the 21-day moving average, the red line is the 50-day moving average, and the 200-day moving average is black. And you can't get, like, if you're above the 200-day average and the 50-day and the 21-day, you can't get below the 200 without first going through those other ones. And so that's why we've been talking through those shorter term moving averages to give you a feel for what's going on in the short term. 21-day moving average basically gives you a month of trading activity in a stock. The 50-day gives you basically about 60, 75 days, and the 200-day approximates 3/4 of a year. And so what I did is I went through the numbers. Last week we had of that almost 9,000, we had 3,500 that were below the 21-day. This week we have a whopping 6,600 below. Last week we had 4,500 below the 50-day. This week we have almost 5,700 below the 50-day, and we had 2,500 below the 200-day, and we're at 3,300. So there's more and more companies trending downward, and I'm going to just share this with you and just show you some examples here so that you can kind of appreciate this. I went through the ones that had just crossed below the 21-day, and I was looking for ones. This number down here, 99, tells you relative to the rest of the market, this stock has historically been, in the last year, been trading strong. And so this one, and again, we're not recommending it, it's just showing some historical numbers on this. This company was trading almost $115 a share back in August, late July. Today it's $70 a share. And when it started breaking through some of these moving averages, it was given maybe some indication you might want to take some of your profits out of that. To get back from 70 to 115 is almost a 50% increase. So from here back up to here, the stock almost has to go back 50%. And that's why you need to be cautious with companies you own, because a 50% move is a pretty substantial one.
And that's also why you be cautious with the indices, because the indices are made up of stocks.
Right.
And so the underlying stocks of the indices of the S&P 500, the underlying stocks of the NASDAQ really tell the whole story.
And here I picked a stock that, again, it dropped below the averages over here and has continued to get weaker and weaker, and that's what can happen. The stock can just continue to get weaker. I don't even know what this company is, not recommending it. Then I looked at the 50-day. What were some companies that have recently dropped below the 50-day? And I was looking for some household names, and Alcoa's got a plant down in Evansville, and Alcoa just yesterday dropped below the 50-day moving average. Well, that would, if you had a lot of Alcoa, it should probably send you a little bit of caution on what you might want to do with that. It really, over to the left of this chart here, was not even in the competitive with other stocks out there, and then all of a sudden it got this little rally. Struggled over here a little bit with 50-day, and then for the last maybe 6-8 months it had a rally and then backed off a little bit. But this was somebody big coming out of that. There's a lot of volume is what these bottom lines show. And here's one that that is the Amazon of China, right? Isn't that what they call this?
Yeah, this stock is it's just been brutal.
Yeah, it hit a high, according to this historical data here, of $319 a share to the left over here. And it came below the 50-day moving average over here, somewhere behind this data block, rallied above it, and then it came down below not only the 50-day, but the 200-day here. And if you look, it's really interesting that every time it tried to get right to this 50-day, it couldn't hold the 50-day anymore. And so that line just kept trending downward. And
this was the darling of China stocks too. Like, so if you have, okay.
Yeah. We're down to the final minutes here.
That's where I was going. Okay, go for it.
Yeah, so we're down to the final minute.
Oh, shoot. Okay, good.
Yeah, so we, this one is a household name. What could go wrong with this? Well, the earnings didn't meet what the expectations were. It dropped dramatically, and it gave up the 50-day here, and it's giving up the 200-day. Well, this gives us a flavor for why some of these indices, because this is heavily weighted in some of these.
Heavily weighted. Can you talk about the RS rating? I know we're running out of time.
Yeah,
talk about
that's the last one here. So the relative strength says relative to the overall market, this is only 28% as strong as the rest of the market. And it has there's nothing going on here to show you that this is going to continue to come back in and draw strength in the market. So what that says is there's something going on in the market, which we can't identify for sure right now, but that's why we're acting very cautiously. We may even take out some things in the days ahead if this market doesn't start to get some strength, but we're aggressively paying attention to what we think is important, not only for the short term, but the long term of your capital.
That's a wrap.
All right, you guys have a great weekend, and we'll see you really soon.
Thanks, everybody.
Bye-bye.